All right, everybody, welcome back to another episode of Discovering Multifamily. I'm one of your hosts, Anthony Scandariato with Red Knight Properties. And today we have a very special guest here with us, Brad Shepherd. And Brad Shepherd is a commercial real estate investor. He's pretty well versed in the field of capital raising. He actually has his own company, Sugarhouse Investments. You can find them on sugarhouseinvestments.com. And Brad started out in real estate, from what I understand, was during his junior year of college, and he was able to purchase some properties and travel abroad for a while, and got inspired from other real estate companies doing larger syndications, and he's been focusing on putting syndications together. And focusing more on the capital raising side. So I think this will be an interesting episode to kind of hear some methods that Brad's been seeing that has been effective, pre-coronavirus, during coronavirus, and now even going out of coronavirus, where we're recording this podcast at the end of May, early June. So Brad, appreciate you coming on the show today.
Hey, thrilled to be here. Thanks for having me, Anthony.
Great. So you want to just give our audience a little background on what you do, and hopefully I gave you some justice there. But what you're focusing on now, and specifically on the capital raising side, and how that works, and what you've been able to do, and how can real estate operators kind of learn from your methods, and
Sure.
just individuals in general.
Absolutely. And you kind of threw my brain for a loop, mentioning my background at the junior year of college, thinking back 20 years ago. I've been at this for a long time, and followed a course that's pretty similar to a lot of people, starting with just the single families, building up a little rental portfolio, doing the fix and flips. Maybe I had done Airbnb vacation rentals, and so I've kind of had a taste of all that. But then it was about maybe 3 or 4 years ago that I became more exposed to the larger deals, and immediately that made sense to me, knowing that they're more sophisticated. These are true businesses, more scalable. And so I wanted to get into that world as quickly as possible. So I did a couple of boot camps, was reading some books, was networking along those lines as much as I could, with the initial idea that I would go out and find my own deals and build those broker relationships and be the one to be the operator. The more I learned, the more I realized, okay, this is definitely a team sport. I need to align myself with folks. This is definitely not, like I had been doing with the single families. It was me and my wife, and that was all there was to it. So as I started to develop more relationships along that front, I learned there was opportunities to work with existing operators, the folks who already have those relationships with the brokers, the ones who are already out there, and you have the systems in place, have the property management in place, all those elements that it takes to have a successful indication. And rather than having to compete with those folks, and be one more player out there looking for those deals, I could align myself with those successful operators and contribute from my skill set with what I had been doing for the last 15, 16 years prior to that, and the relationships that I had built with successful individuals who had money to place with these kind of assets. They were tired of the volatility of the stock market and whatnot. And so that's where, when I saw that opportunity to participate with existing operators and do some legwork, help with some of the operations, help with the due diligence, travel out to these properties, vet these investment opportunities, but then focus on the investor relationship and bringing dollars to the table. For me, it felt like I found my home. So that's been a really fun place for me to play, and I say play because it is fun, but it is to focus on for the last 3 or 4 years has been really enjoyable.
That's great. Can you kind of talk to our audience a little bit about some of the projects you've done and what you're looking to moving forward, and what's been the most effective, marketing strategy that you've used to, attract capital to shift, like you said, out of the stock market into hard assets like commercial real estate? And are you specifically focusing on multifamily or office? What's your preferred asset class of choice?
Sure. So of course, my first step coming into the commercial side, it was multifamily. And it's just an asset that makes sense to most people. Almost everybody has lived in an apartment. we've all been there. So it makes sense to us when you say, hey, we're going to, and it's really similar to what we do on the single family side. And it's just to a different scale. And so that was the first asset class that I focused on, working with operators in that space. And we still do a lot on that front. So I think that's kind of that's certainly the majority of what we do. But I have also aligned myself with other operators that focus on self-storage. And so we've picked up several properties, self-storage properties, both here in Texas as well as throughout the Southeast. And then about a year and a half ago, started working with operators on the mobile home park side as well. Those returns are phenomenal in mobile home parks and self-storage, even stronger than multifamily generally. But they're a little harder for first-time investors to grasp. And so we always want to have those multifamily opportunities in the pipeline. And then as folks get comfortable with those, we'll introduce them to these other asset classes as well. So those are the three asset classes that we have focused on, that we presented to our investors. There are others that we have looked at, and some stuff along oil operations and exploration, including whale discovery, and that's I'm glad we didn't go down that path given what's happened to oil in the last handful of months. So it's not to say that we won't go back to looking at more non-traditional asset classes. But right now, those three are the multifamily, the mobile home parks, and the self-storage are bread and butter.
Awesome. No, that makes a lot of sense. So can you talk a little bit more on the capital raising? Like, usually, what is your process? How does your process work? And when you align with an operator, so let's say an operator needs $5 million, right? And they out of their total raise, and then they come to you and they say, "Hey, Brad, can you raise $1 million for us?" Whatever the number is. How does it usually work on your end? And then what steps do you take as a company to ensure that you're succeeding and therefore the operator is succeeding in a timely manner? Because obviously real estate always has a contract, and there's a clock ticking every time you get a new deal under contract. So how do you align with the operator, and what are some of the strategies that you use? I guess more of, do you have the capital kind of lined up front already, or do you have to go out and figure it out? Like, well, and also, what would you recommend for people raising capital in general to how to approach it better?
Perfect. Sure. So that's the fun part, right? I remember when I first started getting into more active real estate investment opportunities, I met with a guy that was on the development side, and took him out to lunch and asked him all the questions I had, and he kept on stressing, the money's in the money. The money is in the money. If you can learn how to raise capital, you'll never want for needs for activity in this market. I didn't get it for several years, but that's really, that was helpful for me to kind of plant that seed of how do I actually do this, knowing how that at the end of the day, people can secure deals, but it comes down to, do you have the dollars to land it? And so as far as working with operators, when we're talking about a specific asset, I'll generally come in as a co-sponsor of the deal. We want to make sure we're buttoned up as far as the SEC regulations, and so we're keep those in mind every time. So it's not just a paper performance type of arrangement. But we'll talk about the deal that they're looking to raise on, and I'll come in as a co-sponsor, a co-syndicator, and really evaluate the deal. Jump in with them with both feet, doing the due diligence, travel out and tour the property, make sure that I've got my boots on the ground so that I can then talk very educatedly about this property. And then from there, I can talk to the operator about what do I feel like I can bring to the table as far as those number of dollars. And that's now my goal, my obligation that I've made to the operator. I'm committing really to bring this certain dollar amount to the table. And so now, having gone through all that exercise, I can now go talk to my investor database very confidently around what this asset is. I've been out there, I've looked at it, I've talked, and I've knocked on the doors of the neighboring properties to get a sense of these market comps, these market rental. present this opportunity to my investor database to see who among who this speaks to, who wants to be involved. And so now that database becomes the gold, essentially, right? That's just having that database built up where I can then present these opportunities to them, and it's generally presented through mass email marketing to my investors who are part of my database. So starting out, these are folks who I live next to or go to church with or I've done business with in the past. So it definitely starts out with that, just those first degree relationships, and I think that's where most people would want to start out with, is just those people you've had past relationships with. But from there, that's only going to get you so far. You've got to get out to new faces, and so that's where the website comes into play. And so for folks who are interested in that type of this type of work, the website is incredibly important, and it's being very active online to draw people into that website, where it makes where potential investors have an easy in to sign up for that investor database. So it's all those online marketing strategies that folks have heard about, LinkedIn and Facebook, trying to provide real good content there. But all that content leads back to the website, of course, where I've tried to present really simple but helpful information to users who might be coming online. And simple stuff that most folks might have heard but couldn't repeat to somebody else. What's an IRR? What is cash on cash? What is multifamily? What does syndication mean? So that kind of content to help get people familiar with these kind of assets and our investment philosophy, and so they become more familiar with us through all this work that we've done online. And then when they join our database, we'll schedule a phone call with them to do a one-on-one conversation to make sure we understand one another and get to know each other a little bit. Again, SEC regulations, making sure we have a pre-existing relationship. Once we understand their goals and we're aligned there, now we can present live deals to that database going forward. But yeah, so it's the term out there these days is a thought leadership platform. That term gets tossed out there quite a bit, but really just trying to make ourselves a known entity online through the various channels that people are accessing. Was that helpful?
Yeah, that's very helpful. Makes a lot of sense. And so what are you currently focusing on now? Like, what size deals are you helping to, raise capital for? Because I know you mentioned you started out with a small group of investors, and that kind of grew over time. And also, how long did that take you to grow your investor database, and by how much?
Yeah. So generally the deals we're looking at, on the multifamily side, these are 250 units and above. I think the largest one we've done was a deal here in Austin, 450 units, right around there. So it's that type of scale. One of the storage shed units, properties I think maybe had around 1,800 units, right around there, is kind of that kind of range. And so we're raising some pretty good sized dollar amounts. Where my contribution might be, several million to these capital raises that might be, the total raise is 10 million or 15 million, and I'm bringing a chunk of that to the table. And so of course it varies by the deals. I know I can bring more to the table when it's multifamily as opposed to mobile home parks, and so that's a conversation I'm having with the operator. And that's again just a function of the investors who I work with and their familiarity with those various assets.
Gotcha. And are you raising from, is it primarily individuals or is it pension fund? Like, what are you doing? Like, what's your market?
Yeah, from my end, it's exclusively individuals. And so these are folks that I meet with one-on-one, and they're representing their own dollars. I do work with several folks who have pooled money, where they'll get 4 or 5 of them together. For most of these assets, there's a minimum contribution amount of around $50,000. And so we do have a couple of groups that we work with, and they'll put 2 or 3 folks come together, form a little LLC for that asset, and that LLC becomes an investor in the general partnership. And so so that does happen, but again, these are generally private individuals contributing, whether it's personal dollars or retirement account dollars into these deals.
Awesome. So kind of winding this down, Brad, so I have one more question and then some three quick follow-up questions that I ask everybody at the end of every episode.
Perfect.
Do you see, the new investors usually just dipping their, feet in the water, kind of like you mentioned, $50,000. I'm assuming that's the minimum, which is typically my minimums as well, starting out with that minimum, or do some go higher than that? What have you seen?
Almost exclusively, I see folks starting out with that minimum. The first time investor, I don't recall anybody jumping up above that on the first time. Certainly people who grow, they start with that minimum. They kind of watch that for the first 6 months, 7 months, get comfortable. They love these monthly distributions and the reports. They start to get pretty secure with it, and then we increase those amounts. But I think by and large, people will kind of dip their toe in the water with that first investment. It's to get to know the investment. It's to get to know me. It's to get to know the operation team and how the reporting and how this all works. There's definitely scarcity to it, because we'll tell people, hey, if this first time you're hearing about this investment, if this sounds interesting, at least do a soft commit. If you put your name on the list, you can always back out after you see the full deck, the PPM. You can always back out. But I've got several investors that have missed out. One guy in particular comes to mind. He's come in late on the last 2 deals saying, hey, Brad, I've got $100,000. I want to go in. That's sorry, man. We're already full. And so, that's kind of fun. I mean, it's never great to turn somebody away, because I want those dollars.
It happens a lot more than you think. Yeah.
It happens a lot more than people think. There's only so much. There's a lot of dollars right now looking for solid investments, and these are solid investments.
That's exactly right. So Brad, do you have a favorite business book or real estate book that kind of helped gravitate you to get to where you are today?
It's so cliche, but I remember being in college. I wanted to do the corporate life. I was planning on doing the corporate thing, job, going up the ladder, and then I read Rich Dad Poor Dad. Like so many others in this space, it was the first book that kind of really got me going. Oh wow, there's a different way to do life. And as soon as I did that, that was kind of the beginning of the process of looking at real estate and wanting to go a different path, as opposed to just the standard 9-to-5 401k work up the ladder kind of a deal.
Sure. And favorite mentor, if any mentor? A role model?
Yeah, I work closely with a guy here in Austin. It's not really well known at this point, but he's done a lot of amazing work in this space. David Thompson. When I wanted to enter the commercial space, he took me under his wing, and we still to this day work arm in arm. And so I think that's having those big name gurus. I think you can learn a lot from them, but having somebody that you can really latch onto closely may even be more valuable. So that's been incredibly helpful, having a local mentor that I can connect with and bounce ideas off of.
Sure. Hobbies outside of real estate and capital raising?
Yeah, I've got a 3.5-year-old and an 8-month-old. So my personal hobbies have taken a little bit of been put off to the side. But prior to kids, my wife and I love to travel. We're from Utah. We've been in Texas for about 10 years. In between that, we spent a year traveling internationally, just backpacking around. We love to travel. We certainly plan to do that as the kids get a little bit older. We're going to start them young. So travel, scuba diving, we like to do that quite a bit. We've done skydiving. We enjoy that kind of stuff. But right now, outside of work and real estate, it's hanging out with the kids and sidewalk chalk and Daniel Tiger and whatever else to entertain a 3.5-year-old.
That's awesome. How can people find you, Brad?
The best method is certainly sugarhouseinvestments.com. Sugarhouse, just like it sounds, investments.com is the best way to find me. Definitely on all those traditional platforms, Facebook, LinkedIn. But connecting with me via Sugarhouse Investments you'll get right to me.
Awesome. Well, Brad, thank you so much for coming on our show today. Really appreciate it. For those listening, they'll be in the comment section on iTunes, on LinkedIn, wherever we post this, there'll be a link to Brad's website and also a link to his LinkedIn and social media platforms. And don't forget to subscribe to the Discovering Multifamily podcast and give us a rating and an honest review. It helps Brad and I ranking so more people get exposed to our message. Really appreciate you coming on, Brad, today, and hope to have you on here again in a year or so.
I would love to. Thanks, Anthony. I appreciate the opportunity.
Thanks again.